Welcome back to C Morning Show. It's time for Business Talk with me, Alin Ratmaja, and we are joined by Sukor Sekuritas Equity Analyst Zedekiah Joe Diaz. Good morning, Joe. How are you?
Good morning. Thank you for having me again.
Yes, our pleasure. So let's talk about the market. The recap for last week. What are the highlights?
Okay, so as we can see here in this picture, our GCI strengthened up again last Friday after actually moving quite volatile throughout the day. So GCI closed up 0.2% on Friday to 7.238, and GCI still remain at the psychological level at 7,200. We can see here. And then also the index transaction value last Friday actually reached out to 9 trillion rupiah, involving 3 billion shares that change hands at 1 million times. So, and then there's a total of 190 shares rose, and then there's 295 shares that actually weaken, and then there's 276 shares that stagnate. So, and then last Friday also, sectorally, the health sector is the biggest supporter of the GCI, reaching to 0.73%. But beside that, there are several stocks that also supported the GCI at the end of last Friday trading, and here are some of the following stocks that support our index.
Yes, I think this is aligned with what we have discussed earlier. Stellar performance from Indonesia's biggest banks like BBRI and also BMRI.
Yeah.
And we also have this
BNI.
BBNI. Yes.
Yeah. So, I mean, we can see from this picture the big banks are still the main and better options, especially during a economic climate such as now, right? So the two big banks for the main support last Friday is the BRI, right? With the reach index point 11.75, and then we also have Mandiri in 11.6 index point.
And
so,
can we say Astra experienced a rebound?
Yes, this is the
last week.
This is the rebound that everyone has been waiting for, right?
Is it too cheap to buy or now, right?
I think this is it. I think this is the rebound. If you're interested with ASI, right? I think it's a good timing to go in. But I think I just want to highlight that most of the supporters for last Friday mainly came from the banking sectors. So
and is it also a rebound for Prayogo Pangestu's company stocks?
Well, disclaimer, I'm not really a big fan. I think it's mostly just
because it was overvalued?
Yeah, overvalued. So, I mean, during climate such as now, I think it's better to just be in more stable stocks or companies.
Very wise. Yeah. Thanks for the advice, Joe. And what sentiments have been going around last week?
Yeah, so even though our index managed to strengthen again, but still the GCI was still volatile in previous trading. Even in January, if we go from 1st of Jan until the end of January, the market is actually still declined, right? But it's because the investors still in the stance of wait and see because of the global market sentiments, which is the Feds, right? So the Federal Reserve still tends to be hawkish and set its benchmark interest rate at 5.5%. So this is where the terms of higher for longer. So as a result, market expectation, which were previously unified to predict that the Fed would cut its benchmark interest rate next March, which is next month. Now market estimate seems to be divided into two parts, right? So there are people who predict that the Fed will hold its benchmark interest rate again, and then there are also some people who remain optimistic that the interest rate can be cut in March. So there's also actually a survey from the CME FedWatch tool. 65.5% market players predict that the Fed will hold its benchmark interest rate, and then there's 34.5% predict that the Fed will cut the interest rate. So as we can see here, I think this is something that we also anticipate, other than who's going to be the next president of our
Yes.
country.
When's the Fed will pivot?
Yeah, and then this is another important thing that people have been just anticipating next month. Yeah, March.
Yes, yes. So
Yeah,
don't
so-
expect it too soon.
Yeah,
Not
yeah.
yet, maybe. All right. Now, what do you think about how are the interest rates going to affect our index? As we mentioned, you mentioned that we expect it will be higher for longer.
Yeah. So I think it will be probably the same of what we were facing last year, because we have been in this situation for quite some time, right, with the high interest rate. So I think mainly it's just the negative impact of a strong dollar on liabilities or debt whose value is not protected, can make the value of the debt higher and become too much to bear by companies or maybe even individuals. So I think in the stock market, it is wise to avoid companies with high debts, right? And then also we have to expect some pressure on companies whose main source of income is from export and import. Not only that, strong dollar meaning weaker currency strength, the exchange rate, which leads to inflation. And then I think the most pronounced impact of the weakening rupiah exchange rate is the increasingly expensive price for imported products. And then usually rising price of imported goods will make people go to the local products which are more affordable. So I think we can just, for which sector we need to invest, we can look to the banking sector and also the consumer goods.
Okay, so it's gonna be banking,
Yeah, and consumers.
consumer. Those are the sectors that we
Yeah.
can look at or monitor amid this high interest rate
Yeah.
climate or environment. And then I would also like to ask for your opinion, of course, regarding this.
Yeah.
One of the data that we look at here.
Yeah, so between those two sectors, the banking and the consumers, I think my favorite would be still the banking sectors, right? Because if we go in details, actually there are several factors that supports this claim. The release of the 2023 full year financial report was supported by net profit from the banking sector, actually,
Yeah.
which recorded strong net profit growth. And then also the next profit is actually the inflation data. If we previously, this picture right here, as we can see, the inflation for the Indonesia is still under control within Bank Indonesian's target, right? As we can see, the number is steadily at around 2.2 to 3.6%, right? And then the next one is the PMI index. Maybe we can go to the next picture. This is the Purchasing Manager Index. This is where they go surveys purchasing managers about their optimism about the economy of the country. And we can see here from October 23 to January 2024, there's a rise, and then this is what we call the expansionary zone. So I think things are looking good, especially for the banking sector, meaning the economy is just producing right now in Indonesia.
So solid performances from Indonesia's biggest bank show that our economy is
Yeah.
still very resilient amid uncertainties, right?
Exactly, yes.
So for this week, what are your suggestions to all investors?
Okay, so I think from my view of our for GCI in this February, actually, there might be a little correction in this month, right? And then this potential correction may be is caused by three main sentiments.
Yes?
The first one is the expected direction of monetary policy is not loose as expected, right, with the Feds and all that. And then second is the sentiment anticipating data releases is less positive in line with the economic slowdown, because we can see the wars happening. There's several wars actually, and then also the China slowdown, the economy slowdown. So this is just something that we need to pay attention to. And then the last one, the last factor that the reason why I think this month there's going to be a little bit of correction in our index is because the pressure from sentiment towards our rupiah, because it's in line with the potential for an increase in the U.S. bond yield spread. But Aline, I think there are still opportunities that we can take from this climate. I think for February of this year, I recommend for us to look at the financial sector, because this sector was driven by strong financial reports, which were relatively in line with market expectations, as well as expectations in improved liquidity, in line with the potential for interest rate cuts. So I think we can.
Which specific stocks for IDX Finance? Disclaimer on.
Disclaimer, I think Mandiri and BBRI is still it's a good option for our climate right now, which happens a lot of market investors are in a wait and see stance right now. So
yes. BMRI or BMRI is just recorded an all-time high net profit, soaring credit growth as well, and BBRI has a very lucrative business, booking like almost 8% in net interest margin.
Exactly. Yeah.
Yes. Joe, thank you so much for your insights and analysis for market last week as well as for this week. So we can keep on looking for opportunities in the market despite an alert for a correction. Maybe this is a good time to buy for those companies that are solid in performance. Thank you so much once again. And now we are set for another commercial break. When we return, we will bring you the world headlines. So stay with us. Thank you,
Thank you so much.